Good morning, Academy 55. David Khan here on Thursday, the 2nd of October. It's 5 to 8 in the morning, looking at the fate and fortune of the Academy 55 indicators and strategy on the 1 minute time frame on the EUR USD. Well, what can we see here? Well, we just got ourselves a buy alert. I flicked on and off, but we've got all this nonsense here to sort of look at, and we have a red flag news at 8 o'clock for the Spanish. Spanish is a very small cog in the euro, but it might be enough to go 1 or 2 pips. I expect we shall see, or it might do nothing at all. But in the meantime, let's take the indicators off and let's go over to the 5 minute time frame and see that, oh right, we are indeed in a sell zone. So you wouldn't want to be taking that buy, because we have a sell zone and 42. But the difference between that and that is 10 pips. Not enough to give anybody any great confidence. It's more of a visual sign of sideways motion. So we'll wait a little while and see what it gives, because I wouldn't want to be taking a sell, because you've got the buy zones down here. So we'll have a look at the bigger picture. Going to the daily. Now on the daily, we have some fair value gap here from the bottom of that wick there to the top of that wick there. That bit of the daily candle is the fair value gap. See, that one has been mitigated by that wick there, so that is no longer a fair value gap. But price is slowly going up. So we'll go down to the 4 hourly. And we did have a trend line, which was sort of, we'll get rid of that now. It's very important to get rid of old lines that you've got lying around, because you don't want to confuse yourself. And we have a fair value gap up here on the 4 hourly, so we'll mark that up. On the top of that wick there, on this candle here to there. Settings, sell fair value gap, there we go. And we've got our daily one down here, of course. Let's have a look and see if there's any lines to look at. This is a fairly important area, because although there's no point there, it rested there for 4 hours from 6 o'clock to 10 o'clock. So that's the most immediate line on the 4 hourly. Let's go down to the hourly. Well, there we can see it a little bit clearer. And just here as well, horizontal line. I'm going to put that in because it's closest to price. Bounced off there and it bounced off there, so that is a fairly important area. So going down to the put the candles back on, going down to the 5 minute. As you can see, we are in a sell zone. So we'll mark that up. We'll also mark the buy zone up. Now that 8 o'clock news didn't really do anything with the Spanish news. A little bit, I suppose, but we can see we're generally going up, but we got to ignore buy signs because we're in a sell zone. And indeed, we got another sell zone up here, so I'll mark that up. And we're not equidistant with the high. Now, during the Asian session, which started there, we're generally been going up. So a lot of the time during the Asian session, it goes up. During the London session, it'll go down. So we are looking for a sell, if anything, as told by the fact that we've been in the sell zone. Sell zone there, buy zone down there. So when we want to be taking this buy, although we are finding new higher highs, it could be going into the sell zone up there, or that support and resistance line, and then going back down off that. But we're too late for this buy alert. I'm too late for this buy alert. So this is the sort of situation that I would want to be in. In anticipation of the green wave turning red. A nice sell alert. The sort of scenario I'll be looking at. But time will tell on that one. So look at some short-term news. Tech leads Asia share rally. Dollar steadies as Supreme Court allows Fed's Cook to stay in the job for now. Darkness falls on dour US jobs market. Right, jobs market, that'll make the dollar fall, which would maybe take into account why the euro is getting higher, because the dollar is weakening because of the job market. They predict a bad job market. And incidentally, on tomorrow, 1:30, you've got the non-farm payroll. So it is bad. Expect a big fall tomorrow on the dollar. And that's right, possibly why the euro is rising. But we had our sell zone there. I think we're too late for this buy. We could be rebounding off this. It's far better to take a sell than it is a buy. So, but I do appreciate that the buy could be getting up here to here where all these there could be loads of orders. I'll wait and see on that. But we are only concentrating on 1 or 2 trades a day. And the reason for that is we take the pressure off ourselves with our trading. We don't need to trade so much as we think we do. And the reason for that is Steve has made a nice video to show you why we have such a low monthly target. So I'll play this now. It's only 2 minutes long.
In this short video, I'm going to talk to you about making profits without putting yourself under undue pressure. And it's why we only have a 10% monthly target inside the Academy. Let's look at the evidence. On a $100,000 FTMO account, if you win 10%, you win $10,000. Now, FTMO will pay you 80% of that. That's $8,000 per month. Now, $8,000 a month is $96,000 a year. If we look at that in pounds, it's the equivalent of £70,080 and the equivalent of €81,600. Now, £70,080, if we divide by 12, that gives us £5,840. And if we take the euro amount and divide that by 12, it's €6,800 per month. But what if you only win 7.5%, reducing the pressure on yourself even further? On a $100,000 FTMO account, win 7.5%, you'll win $7,500. FTMO will pay you 80% of that. That's $6,000, and $6,000 per month is, of course, $72,000 per year. Take that figure and divide it by 52, it's $1,384 per week. In pounds, it's £1,010 per week, and in euros, €1,176 per week. And this is why we only have the low target of 10% per month. As you can see, even at the much lower target of 7.5% per month, you're still earning a substantial income, making profits without putting yourself under undue pressure.
Thanks, Steve. Important to remind ourselves of that. And another reason is because of that, we don't have to rush into any trade that we see. If you don't feel like trading that day, if you don't feel it's a good probability, don't do it. You don't need to. And you only need to take 1 or 2 trades a day. And it gives you a lot more relaxed probability because it helps you maintain your discipline and it helps you get rid of your fear of missing out. So all in all, that's a really good thing that we're doing because we proved time and time again, 10% targets are very, very easy to achieve. So you look for the best probabilities in your trading. But now we would be looking at the trend line where the stop loss would be, assuming it goes horizontal and red, down towards the 2%. So what we'll do is turn the MT4 on. Now I've got the latest, the 10.27. It gives you this FN box, turn that purple, and then you can close all trades, whereas before we used to have a rectangle. Make sure your risk to reward is in purple, your lot calc is in purple, and you've got that all-important 1%, although last month we had low liquidity, so I was putting in like 0.9 or 8. And because of the low liquidity, when you go to take a trade with the extra, it bumps it up. So it'll be round about 1%. It might be a little bit over. It's not exact because the liquidity had been so low in September. September traditionally is a low liquidity month, but we'll see what it's like today. So I'm going to put it back to 1%, but it might be a little bit over. We'll see. I like to keep 2.2 pips away from stop loss to entry. Minimum, could be more than that. I'm going to put the lines on now. And see what happens. Let's quickly go over to the 5-minute time frame. We've got the fair value gap there, maybe a little bit there. We've got fair value gap down here, so that's looking quite good for price maybe to come back down again. Maybe it will come back down. Trouble is, we don't know when. Shame they don't have a timestamp on it. So we are waiting for the next. See there, we've got a bit of slippage. These little gaps here. This is fairly low liquidity. But this time of the day is the time of the day where we can expect a little bit more liquidity coming into the market. Usually, if it does happen, it usually happens this time of day when London's opening. Bit more of a trending at this time of the day. Ah, right, we've got a sell alert now. So it flashed on and off. So we will look at the next sell because we were in a sell zone previously. And we're here ready waiting. We can see little bits of fair value gap here that need to be filled, but we don't know when. Have they set their stall out to go a little bit higher, taking advantage of a weak dollar? And if it's very weak, they might want to go really high, but they'll want to, they possibly will want to equalize the fair value gaps as they go. So we'll see more of this going down here and then shooting back up again, maybe. But we trade what we see, not what we think. So we'll go back on trading view a minute because this is what we want to see. There's that former sell zone. I'll get rid of that so as not to confuse people. Again, like I said, make sure if you've got too many lines on your chart, make sure you know what they are. And if they're old ones, get rid of them because it'll just confuse you. They're really the only lines you need are the ones on the Calorie 55 indicator, really. But right, yeah, I think the bigger picture is to go higher. This is the the sell zone we got now. Are there lots of orders there ready to be taken? We don't know. Let's go on the take the indicators off a minute. Go on the 15-minute. And discover it's the highest has been since yesterday at 4 o'clock. So we've got fair value gap there. That came down to mitigate that fair value gap on that. And so there isn't just this bit here. This is all fresh though. So there's no fair value gap on that candle there because that wick there had mitigated, equalized that one. But are they going to be tapping into this imbalance that we drew up earlier on? Going into the sell zone? Quite possibly. Well, let's have a look on the 5-minute. That fair value gap there has been taken away by that wick there. But we have got fair value gap on this 5-minute candle here. So hopefully they won't go too far up before wanting to come back down again. We just got to be patient and wait. As always, put the indicators back on. Because we are above the purple line, there is a buy side, a buy bias because of this. I want to see where the purple line is. Right, so yeah, there is a buy bias. It was too risky for us to take a buy because we were in sell zone territory, and a sell would be a lot safer. And like I said before, because of our low monthly target, we can pick and choose the best probability trades for us. So this one got away, but that's okay. We'll wait for the sell. And there's reasons price to want to come back down to equalize all these candles here. I'm tempted to have a quick look. I've got this on another monitor, and I'm tempted to have a quick look at yesterday evening, just to see on the US 100. What am I doing? So you go there. Wednesday the 1st. I'll put it on the 5 minute first. There we go, that'll be better. Wednesday the 1st, 7 o'clock in the evening. Let's do 6 o'clock in the evening. Go to. Get my time machine. Yeah, let's go at 6 o'clock, which is there. Ah, we're coming into a sell zone. Let's have a look. Got the trend line there though, that I drew up on a previous time. Let's go down to the minute time frame. We're in a sell zone, so we wouldn't take a buy. We're looking for the next sell because we're in the sell zone. Play it on. Let's see what's going on. Bit risky that was. A buy. And yeah, if we take a sell, we'd be looking very risky here, bouncing as it does over against this trend line. But at the same time, if our sell zone's gone that we knew was there, price is going really right. Hang on, we're sorry, I'll abandon this in a minute. Just have a quick look at the yeah, thought so. There we are. We're back to, sorry about that. Going back to present day now. We'll come back to that later if we get a chance. But because I'm near this parallel SAR gets swept up, I could see a scenario where we might have a sell on our hands. Maybe nothing. We may be going along and then carrying on up. But just in case, I wanted to be near the where possible action could be. Where the parallel SAR is now, that's where I'd want my stop loss. Assuming price comes down here, takes that parallel SAR, throws it up above, a nice seller there, everything turns red, red, red. And then hopefully get a sell to get our 2%, but we'll see. We'll sit here and wait, I think. Won't go back to just looking around. Concentrate on the job in hand. But right now, recognize the consolidation, picking up orders, buy and sell orders. But there is reasons for price to want to come down to mitigate these imbalance areas here. But like I said before, when that happens, we don't know. The volume ribbons have started to turn red. Is price going to come down to, look at that, the purple line? Hope so, because our 2% will be in the way. And because we're on the minute, if a bit of volume does creep in, which can happen at this time of day, especially this time of day, we could find ourselves in a sell really, really quite quickly. Could be. So we'll just sit here and wait. Just a perfect time to remind you, any trades taken are for educational purposes only. You do you, I'll do me. Right, the parabolic SAR has flipped above there. Waiting for price to be down here somewhere. And all these to turn red, obviously. The trend line is usually the last one. And sometimes that can be anticipatory. But this is where the stops will be, because that is going to be closer to the entry. If indeed we get there. Right, good sign. Coming down. We've got imbalances down here, and here, and here. Doesn't mean to say it's going to do it right away, but there's a reason to go down there. Did they amass enough sell orders in this conciliatory area to go down further? We certainly hope so. The wave just turned to red now. And that's where the stop loss will be, just where we are right now. if we carry on down. But we haven't got a sell alert yet, you noticed. But it isn't too far away if we carry on down. The indicators will stop you getting in too early. That's why we have these red scenario. Bear in mind, we've also got imbalance up here that needs to be filled. But if they do plan on having a longer term buying program in the London session, that will be swept up later on this morning, or they could do it right now. You know, you just don't know. See, the buyers are trying to be in charge on that candle there and coming across sellers, and but they're trying, buyers are trying to come back in again. Bit of indecision now. All the time the trend line's going horizontal, which is nice. Again, anticipatory, that could go red at any time, really. And also, when you are trading, make sure you don't get your screen all scrunched up. Widen it as much as you can so you can understand and look at the candles properly and understand all the indicators properly. Of course, this action is not, doesn't look great. But like I keep saying, I sound like a broken record, but this time of the day is one of the times of the day where things settle down and orders are being taken, obviously, here. They're deciding what they're going to be doing. The sellers are winning a little bit, but buyers are still thinking, I don't know. We still want to go maybe a bit more of a buy. There might be still a little bit in it. And all the while, of course, it's stopping you taking a trade and getting in too quick anyway, and you're saving money. So that's good. Buyers are on a bit of a rally now, possibly to get this liquidity, this fair value gap here on this candle. So what's seen that we could be on a sell? Well, it still might happen, obviously, but equal high with that candle there. Interesting. So look on the 5 minute. Still on a bit of a buy on the 5 minute side of things. We've got fair value gap down a little bit down there. And here on the 5 minute. But we all the time we are going sideways, they're taking orders, buy and sell orders. There's no sort of urgency here. We've got about just over 15 minutes together. And if nothing does come to light, it's no problem. Look again later on today. But because of the low monthly target we set, if you can come back today, it's still only the 2nd of October. Come back tomorrow morning. But I wouldn't recommend trading after midday really tomorrow because of non-farm payroll. Because when price goes down, it creates imbalance, and we don't know how much bigger imbalance they want to create. And we know it needs to be filled, but they could do it on next week, you know. No, it's not very inspiring. There's not much going on. I think I'll put it back on trading view again. Yeah, let's abandon that. Let's go on to this. Got a little bit like we might be in a trade, but not to be. Recognizing all this sideways movement. Lots of indecision going on. When you see a wick above and a wick below the body of the candle, that is indecision. So let's go up there. No, let's go down there. No, stay here. All right, then we'll sell a little bit. Oh no, it's too far. Let's go up. Yeah. So what you see on the bigger candles that makes the difference. On the 10-minute time frame now, got some value gap down there. Look how we're on the support and resistance line, literally. It's tentatively on the 30-minute time frame now, tentatively working its way up. So this support and resistance line is holding price there. That's obviously a very important area. And yeah, just there, look, is a psychological area, 1.17500. That's half distance between the key zones. So I can do this. That area there, it's halfway distance between that area there. That's a psychological area. And what have we done now? And that area down there. So we're halfway between the two. So this in itself is a psychological area. But so maybe they decided to plow on and take advantage of a weak dollar. Maybe there is sell orders for them to take up here. Let's take the indicators off. Let's go to the hourly time frame. On the hourly now. As you can see, price went into this is our zone, the 5-minute zone, the buy zone, and it is doing its job, isn't it? But I'm just seeing if we can see some sort of pattern. But maybe I'll put it on the 30-minute. Definitely a steady climb. Possibly getting up to these areas here, which would make sense. So perhaps they are going to go into that sell zone before And then from there, of course, they could tap into this imbalance. If at that time the dollar is seen to be weaker. Doesn't help us at the moment, but you guys are lucky you're not losing any money. Just got to sit and wait and be patient. Well, we did think just here we could have been on a bit of a sell, but it didn't appear to be the case. That's fine. Can you trade what the market gives you? So, if anybody's got any questions, do feel free to text them in about what they've seen here today. And if I can answer, I certainly will. The Japanese yen is in a better position than euro to benefit from weaker dollar. But the euro is benefiting, as we can see, from a weaker dollar. You may ask yourself the question, why don't I go and look at other forex pairs and other commodities? And the reason for that is because the whole idea for what we're doing is to keep things nice and simple as possible, and to show you that by doing that, you can still pass an FTIMO challenge just by not getting yourself uh, involved with other strategies, other time zones, other pairs. Keep it really simple. That's where people go wrong, especially in the early days, because they don't know what they don't know. And they move from one strategy to another strategy and then get themselves all confused and then just go mad, basically. Whereas by keeping into one strategy with one pair, possibly two as we've got, it's possible to get what you want out of the market on a monthly basis. Prove that time and time again. So if it ain't broke, don't try and fix it, sort of thing. And if I was to show you other forex pairs and stuff like that, it would just confuse. There's no need of it. this is all being researched, the EUR USD to work with the Cali 55. Also, the US 100 has been researched. But I do know that other pairs on many occasions work okay with it, but don't want to go down that route. But as it is at the moment, it looks like we ain't going to be having a trade at the moment. So I will come back later on today if the time allows, my day allows, and I will be trading a little bit later on. I do appreciate you all being here today. Maybe we might get a bit of a sell-off at 9 o'clock. Sometimes they do, it does happen on the hour that a little bit more volume comes in. For a sell, maybe. Because it will sell off eventually to get down to these levels down here. But when? Because we started climbing on the London session. I expect that's the main intent. But it will have the retrace. But if the dollar is really weak, the euro will want to take advantage of it, certainly. Until until New York opens, and then they might have something to say about it. They'll want to be shoring up the dollar. And doing things to make sure that the dollar doesn't get any weaker, no doubt. But the way to look at it is I'm pleased with this session. Why? Because we didn't lose any money. And that's the way you must look at it. Right, maybe this time. Let's go and check it back on the MT4. Making sure we got the risk reward in purple, a lot calc in purple. Now maybe this time we might have a deeper sell. We've got 9 o'clock. We've got news for the Italians. Not the biggest cog in the euro wheel. Unemployment rate. So I would expect big things on that, but it might be enough to bring this down here and get the sell alert activated at 9 o'clock. We'll see. I'll wait till just after 9 to see if anything happens. And if we do get in, I'll leave it on and I'll go mute. Ah, right, we've got a sell alert. So interesting. See this here though, slippage. I'd like to see that, but there we go. No liquidity. But it is what it is. Right, I've got this. Oh, it's looking to equalize that fair value gap there. Sell alert. Trend line is gone horizontal. That could go red at any time. Let's quickly turn it over to the 5 minute. Fair value gap there. Volume ribbon could turn red at any time. The wave has turned red already. Patience could pay. But bear in mind, we have fair value gaps up here now. So we want a little bit more confirmation. The way the candles are moving isn't that great. There's no sort of, you can tell there's no sort of liquidity or, oh, right, we've got a red trend line now. This is good. And that could turn, the volume ribbon could turn red. We've got a red wave. But it's monkeying around again. If we've got bad figures from the Italian, it could bring it down. But equally, if it's good figures from the Italian, it could go back up again. Well, we'll know in another minute, another 20 seconds. Red volume ribbon now. Five, four, three, two, one. There we go. Not a lot happened. Well, I'll keep it like this for a little while, seeing as we're on the verge of maybe a sell. But here, down here would be a point of interest to look at if we do carry on down. Got my finger poised over the sell button. I want to go like 3 pips between stop loss and entry, really, for a bit more of a confirmation. But it's not looking looking great, really. We're in a low liquidity sideways movement situation. It's not the best conditions for trading. And you know what? I'm not really inspired by this at all. Saved ourselves some money. Being with you guys for an hour. If time allows it, I'll come back later on myself. If it doesn't, there's always tomorrow. Have a great day, and we'll see you soon. Thanks for being on. Have a great day. Bye for now.